It's not that the gold price is going up, it's the purchasing power of your dollar that's going down, and it's going to keep going down. So keep buying gold as your protection. Visit my friends at sdbullion.com and they will help get you the metal you need. Happy Monday and new week greetings, everybody at TFMR. It is Monday, February 23rd. It's now the last week of February. We got COMEX option expiration tomorrow. We got the March silver going off the board and into delivery Thursday night. And soon we'll be printing not only the daily and the weekly charts, but the monthly charts as well. I mean, that's a fast month, brother. You can think back to where we were when January ended. Of course, how could we forget Friday, January the 30th? But I remember recording a podcast the next day, Saturday the 31st, saying, in the end, these monthly charts, they don't look that bad, particularly not gold. But let's just see what February brings, because we could turn around a lot of this or it could get worse. And guess what? At least as it looks now, with 4 days to go, the monthly chart, particularly for the shares and for gold, might end up looking pretty good. So we'll wait for that as we get to Friday. And between now and then, there's a bunch of goons tomorrow. Like I said, we got COMEX option expiration tomorrow. But remember, we talked about that on Friday. There's really, for a front month of March silver, there's not much going on. There are a lot of open calls way up there above 100. Down here at 86, 87, 88, there's not much at all. There's some gold at 5,200 and more at 5,300. But there's not much there either. So I'm not too worried about option expiration tomorrow. Bigger deal tomorrow will be what happens with the Chinese tonight. There's not been Shanghai trading since Friday, the 13th. They shut her down Friday the 13th, which was overnight for us Friday the 13th, and have not traded. They've been this 6 days, but they're back tonight, brother. What are they going to do with all this? Where was price when they went away? And where is price now that they've come back? Well, I can answer that for you, as a matter of fact. Silver back on Friday the 13th was, 85. Well, I guess closed down there at 75. It was Thursday the 12th when it got smoked down to 75. I guess we closed. When we closed, somewhere closer to 78. Anyway, we shall see how all that goes when the Shanghai Exchange opens again, 9 o'clock. No, I got that wrong. 8 o'clock. Oh, God, we're not even dealing with the time change yet. That's still 2 weeks away. Anyway, 8 o'clock Eastern tonight. And we'll see what happens. Big day for the metals, which is great. And again, at a time when not much else had a very good day. Stonk market was down. NASDAQ was down about 1%. The S&P was down a little more than 1%. Crude was down, but just a little bit. Platinum, palladium, and copper all down just a little bit. But a really good day in the metals. The only thing that really held back anything was silver during COMEX hours went sideways. Take that little thing out. I mean, it's up $1.50 on the afternoon Globex. So gold, though, just kept moving higher all day long. Got all the way to 52.57 this afternoon. Now it's eased back some. It's back to about 52.47. That's still up $165 on the day. Again, 5,100 had been the level that we've been capped at. And I thought that was going to be the new range. We blasted through there. We've been talking about, could there be kind of air pocket type activity with that big red candle from January the 30th? Well, we're kind of finding out. We went through 5,100 like crap through a goose. And now we're $150 up from there and making a move ultimately toward what, 54? 55? Yeah, looks like it. Silver bottomed out last night at 85 during the London session. Like I said, traded sideways through COMEX. Been rallying this afternoon. Got as high as nearly 89. Right now I got about 88, which is up 550 on the day. And the shares did well too. Again, flying against some malaise and concern over AI and all that stuff, hurting the stonk market again. But still, GDX up 4 points. Okay, you would have liked to see more. I know that. Me too. But it's still up 4 points. 110.27 at the New York Stock Exchange close. That is the second highest all-time close. Only behind January the 28th, my birthday. So do you think I'm pulling for some new all-time highs? I am. My accounts, and I'll update all of my positions. I've changed a couple of things, moved a few things around. Not much, but I'll update them all to mark them all to market this coming weekend for the end of February. But anyway, I'm back to within only about 2% off of my personal all-time high, which was back on, again, January the 28th. So I'd sure like to even just hit a marginal new all-time high, just so I don't always have to associate all-time highs in the shares and all-time highs in my accounts and all-time highs in the metals, too, for that matter, with my 60th birthday. We'll get there eventually. I just would rather do it sooner rather than later. Like I said, tomorrow, a lot of goons. And we got that option expiration on COMEX. Other than that, we'll just see what kind of scheduled news we have. I wrote a piece today for Sprott Money. Last week we wrote about silver open interest and silver positioning and the commitment of traders. Today I wrote about gold. And you're going to want to read it because it talks about how could gold be in a bubble when we have the smallest speculative positioning in COMEX gold since late February of 2024. We discussed this in Friday's podcast. Again, that was before gold even broke out above 2,100. And we're washed all the way back out in terms of speculator participation on the long side or even on the net side. So anyway, I'll copy and paste that tonight. And that will be your morning post tomorrow. And then, but I'll be around adding stuff. You know how it is. Anyway, and then we'll have a podcast in the afternoon. Bond market rallied today. I'll show you that in a second. Dollar tried to dump, but then came back a little bit. But even that didn't slow down the metals. Nice jump in open interest back on Friday. Gold up $83 Friday. Up 165 today, but up 83 on Friday. Open interest up 6,600. Remember I was talking about this 2 weeks ago? With some of the lowest levels in COMEX gold open interest since late 2018. And as speculative interest comes back in, the banks will add the shorts, they'll add the contracts. Open interest will go up with price. That's how it works. So when we were sitting there at 7-year lows, you had to figure we were probably at price lows, and now here we are, up 83 Friday and up 165 today. No doubt adding open interest today, too. Added some open interest in silver with price up $4.71 on Friday. And again, up $5.60, up $10 in 2 days. Take it. But open interest only up $1,500 Friday. We'll see what it is today. It's going to be fighting against rolls. We may even get declining open interest as we go through Thursday, as Marches are sold and then only partially rolled into May. We're already at lowest levels we've seen in a year and a half. We're only 132,000 as of Friday. We'll see. We get one give back day, and we're going to see open interest drop in silver too. Now we'll see what happens with Shanghai. We will have a give back day tomorrow, kind of buy the rumor, sell the news thing. Again, we've rallied out of Friday and today, up over $10 in silver. Buying the rumor, selling the news. So we'll see. Maybe we'll get a pop overnight, get some pressure. If we do get a dip tomorrow, I'll be looking to buy it. I own calls on the double long gold right now that I bought on Friday. That's working out great. I bought calls on the GDX on Friday that I sold mid-morning today because I'd well more, maybe made 150%. Like, you can never go wrong taking that in a day. So I took that, but I'm looking to get back in. They were just calls for this week. So I have to stay kind of limber and nimble. We get any kind of pullback tomorrow. Again, on what would essentially be a buy the rumor, sell the news of Shanghai returning, well, then I'll take it. And we'll see if we can't play some more. So anyway, that's where we are. Great start to the week. final week of the month. And again, now we'll be 2/3 of the way through the third quarter. And what do we know about the fourth quarter? Average gold was being sold at what, about 4,200? Average price of silver, at least for the ones that didn't have some kind of fun deal going on, was about 55. Where are we now? 2/3 of the way through the fourth quarter? I don't know. You call it. 5,000 in gold, up another 20% from the fourth quarter at this point. Where are we in silver? 90? 85? Up from 55? Yeah, you think I want to buy the dip in the shares every time there is one? I do. Okay, what do we have on this page? First, demand for the Fed's standing repo facility. Okay, this is where you need cash, not reverse repo, where we're parking cash, okay, and getting interest on excess reserves and all that kind of stuff. This is repo, where I have securities like treasuries and I need cash. Demand for the Fed's repo facility, $30 billion on Tuesday. That's the fourth largest operation since the pandemic. You can see these little spikes in here. Okay, kind of spiking a little bit late last year, got everybody's attention. You can see pretty quiet after March of 2020, where it was 90 billion. Still, I mean, that's interesting, isn't it? Keep an eye on that. Because where would ultimately new liquidity come from, I wonder? Yeah. Some of the issues with the stock market, IBM. Remember all these stocks that over the last couple of weeks, a couple hundred of the 500 in the S&P have had more than 7% down days, something like that. Well, now add IBM to the list, down 10% today. Learning that Claude can code. Biggest crash, this third biggest crash in the last 25 years. And then look at what is happening to the tech sector in terms of market values tech at the same PE multiples as staple companies. Is that what they're becoming? Like utilities and consumer staples? Great rotation. That would definitely add the rotation back toward value, which is what these big mining shares are basically perceived as. Or if you're looking for growth to replace some of this growth, why wouldn't you be looking at the mining shares? To that point, look at this note from Tavi. Gold equity is still far from being valued in a way that reflects the operating leverage embedded in today's metal price environment. Read through this. Now he goes on to talk about Snowline, which I have profited greatly from over the last couple of years and still own Snowline because of the math. Read the math. And you might consider taking a look at that stock, even though it's whatever it is now, $12 a share or something like that, up from $1. Don't forget about uranium. I own UEC, and I own the Sprott Uranium Trust, whatever it's called. Not the physical one, but the one Uranium Miners that owns about 25% in physical uranium, yellow cake. I think that's what they call it. Anyway, Financial Times writing about uranium today, warning about impending shortages due to rapidly increasing demand. You think? How are you going to power all these AI centers? And then lastly, just some war update. This first thing is a quote from Zero Hedge article that is quoting the Wall Street Journal, saying that the head of the American Joint Chiefs of Staff, General Kane, you hear him referred to as Raisin Kane. Anyway, big Trump ally. Trump loves him. And the Wall Street Journal is reporting that, he's not too excited about this idea of attacking Iran and what kind of success we could have without having significant casualties. Led Trump to come out with this True Social tweet. Look, I don't know what's going to happen there. Again, I prefer nothing to happen there. But I don't know if that's the way it's trending. And then finally, this about mortgage rates. I mentioned the yield on the 10-year note down today. Yield on the 2-year note down today. 4 to 5 basis points, shifting the whole curve down. 10-year note at 403. Average U.S. 30-year fixed mortgage now down to just under 6. down almost a full point from a year ago. Worth noting. And there's your chart of the 10-year note. You go back to the end of January. Remember all the nonsense about Warsh and Hawk and all that kind of stuff? And that spiked it up to 430 the beginning of this month. Here we are 3 weeks later, 403. And the lowest close on the yield on the 10-year note sits all the way back there in late November. Interesting. Here's your dollar index chart. We've been kind of tracking this along, finding resistance at the green line, the 50-day moving average, kind of working itself into a corner here. Kind of on the lower end, anywhere below 98, I suppose, is kind of the midline of this sideways move that it's been in now for the better part of 9 months, between 100 and, let's call it 96.50. So anyway, we'll keep an eye on it. Tried to sell off today and then came back. All right, look at this. This is gold from last night. Went straight up at the open last night, 5 o'clock Central. Traded up and then went down when Asia began to open. Of course, didn't do much. At Shanghai at 7, traded sideways, tried to dump after the AM fix, all the way back to 51.15. Tried to sell off a little tiny bit after the COMEX open. Then we got to 8 a.m. Central. Rallied into the PM fix at 9 o'clock Central, and then really just kept going. Closed the COMEX at, 52.25 or so. And I got a last, like I said, up around 52.50. Now compare that with the chart of silver from last night. Okay, rallied, dumped into London. Anyway, spent COMEX basically going sideways. COMEX opened at 86.40. COMEX closed at about 86.40. And then once that was done, rallying again. Now, maybe people are this afternoon front-running Shanghai coming back. We'll see. Maybe we'll rally tonight. Make a run up 90, 91, 92. Anything's possible. But again, I would be surprised if we had it, after rallying $10 already, almost 15% Friday, Monday. I'd be surprised if we added a whole lot more on. I'm inclined to think, again, we'll probably suck a few more people in this evening, and then they'll try to hit us on the COMEX tomorrow and knock it back down, at which point I'll see if there's a dip to buy in the shares as well. And finally, just your daily chart updates. Now look, on this gold chart, the most important, don't pay attention to the blue lines just yet. I just drew those for fun. The most important thing is that gold got back above its 20-day moving average on Friday, the red line, and then surged today. This looks like it's cooking again, which is why when it rallied on Friday, I bought those calls. It's the UGL, which is a double, like the AGQ, if you know that one. It's a UGL is a double long gold. Straight up COMEX options are so friggin' expensive. It's just, you can't, it's almost impossible. They've got so much premium in them. So anyway, I bought those. They expire, third Friday of March. So I'm good. I got time. And it sure looks like it wants to go up. We are now trading inside of that big red bar from January the 30th. So it's not necessarily an air pocket as I wrote this morning, but it certainly looks like there's room for it to run up to about, what is that line up there? 54.50, maybe 54.60. Now when you look at the blue lines I've added, notice the resistance in the middle blue line for 2 weeks earlier this month, and now we're back above that. Could you then go to the upper blue line? Yeah, conceivably. We get back up to that level, everybody, they're going to try to paint a double top. You know that. Oh, it's a double top. You can see that coming a mile away. But I think in the short term, there's a pretty good chance gold's going to add another $200 here. Again, maybe not tomorrow, but maybe later this week. Hell, we're up $200 in the last 2 days. Maybe we take a breather for a day or two and then charge forward again. Anyway, I'm very excited that I'm in those UGL calls. Silver, in the key here, I thought we were in this range between 70 and 85. And if they could keep it going sideways, they could bust the 20-day down through the 50-day for a while and see if we get the machines to dump and drive it back to 70. Instead, we broke out today above 85. When I printed this, we're 88.64. Like I said, we're now closer to 88, but back above the 20-day. Okay, the holding above 85 sets a target at 95. And just where gold is now filling in on that big red candle, silver could start to do that too. But I would suspect for now, we're going to run up into the 90s, maybe even 92 or something, maybe even this evening, early overnight, once Shanghai's trading again. Then they'll try to bust it down and maybe come back down and find support at that 20-day, find support at 85. Then we'll have some fun, especially if gold's moving. As you would imagine, I'm watching that one really, really closely. And finally to the shares. Like I said, second highest close of all time today. This says 109.86. Actually finished 110.27. Only right behind, what is that, January the 27th. The all-time high close up there at 112 or 113 or whatever that was. Now, I don't know if this channels anything, but it kind of looks like it might be. From that peak in October and then the other line from that double bottom low in early November. I drew the bottom line first and then just gave you a parallel line with it. And look how that lined up with those highs back in January. So anyway, the shares look great. By the time we get to that new line, that upper line, it'd be what, 120? That would seem a logical target in the short term. Maybe, again, not tomorrow, maybe by early March. And I'd love to be in some GDX calls when that happens. Okay, so good luck tonight. Let's just see what happens tomorrow. I'm not looking to chase. I will be looking to buy the dips, but particularly in the shares if we can get one tomorrow. Or maybe in silver too if we can get one tomorrow. But I don't know. All I know, it's going to be good to have the Shanghai back. Remove that variable as we go through this week. All right, post of the morning, like I said, of my Sprott Money post today. And anything else I can find this evening. And then we'll have a podcast tomorrow afternoon. Thanks for listening. Good luck tomorrow. Pal Turd Ferguson signing off, and I'm out.